market kind of opens up to start down ticking. And so we're just trying to take advantage of it. Sometimes very well, you get a lot of volatility in the morning, other times it's very slow in the morning, so you just never know. As we quickly come up here to our 66 area and come off of it very quickly. Right? As you can see here, you have the heavy orders in place. Again, you're definitely keeping your orders in place and also keeping your stops in place as well. And right up to 66 and quickly rotate it down here. Again, you got to be a little bit quick here. Obviously, your orders have to be in place so that you take advantage of the volatility. If you decide to put your orders in after the market gets there, you kind of miss the whole move. And I always keep saying that you gotta, your stops are automatically triggered. We're getting a nice rotation here off of our level here against the 66 area. All right, again, we are going to get those opportunities to trade, and you got to keep that in mind. Nice big order there at 60, 500 lot, as you can see. Yeah, the red bands are just the outskirts of those bone bands. I don't really put too much credence into those bands. So the level is not created because of the bands, but it's not that way. All right, so nice rotation there against our first level of resistance right up at 66. Again, you have to have your orders in place to take advantage of the rotation, especially with the volatility. I know it's taking more risk, but by the same token, there's a risk-reward situation here. As you can tell here by our first level that worked very nicely. And you took absolutely no heat on that whatsoever. And if you want to try this thing long, again, you're peeling some contracts off at the same time you are, taking profits along the line and trying to have a trailing stop or anything else. So keep that in mind if you are trading. And a nice rotation there, and right down to our blue band there. Also, that's where you would like cover those. And a nice little rotation there. If you did the scalp, you can scalp that blue band area. Nice little entry point there for you. We're looking to get long or just scalping it. So nice little quick couple opportunities there. Again, we talked about the volatility in the market. We're usually about 2 or 3 points right now. We're definitely looking at 3 to 4 points, or like 4, only because of the volatility that's out there. So keep that in mind. Minimally, at least 3 to give yourself a chance at these levels. And you have to, like I said, we always have to take into consideration the volatility in the market. So that's why we had to expand our stops this morning. All right. Let's see here. The world's second largest economy is in a predicament, and the property market stands at the heart of its trouble. Construction accounts for as much as a quarter of China's gross domestic product. But real estate, the reverberations are shaking up confidence, and many are afraid about a knock-on effect on the overall economy. Housing sales, prices, and investments are falling. This is in China, and again, we are in a world economy days. So while inflationary spiral threats to fuel an even bigger disaster for a country that has just experienced 3 years of strict zero COVID controls. Again, the China situation slowly creeping into our markets, or not so slowly, depending on how you look at it. The world's most indebted property developer in China just filed for a protection under Chapter 15 of the U.S. bankruptcy code which shields non-U.S. companies that are undergoing restructuring from creditors. Evergrande already faced a liquidity crisis in 2021 following government effort to curb speculation in the sector, and currently has around $300 billion in liabilities. Another Chinese developer, Country Garden, has also been in the spotlight after missing dollar-denominated debt payments. But the bigger fear here is the property crisis may expanding from private sector to companies with state backing. As we come back up here to these highs, we're looking next level on the upside. We're looking around the 74 area, 74, 75 area there. Again, orders on to jump in there and get long around 59 there because the blue band are doing pretty well with that. We were able to cover some shorts around all the shorts around level. There's always a good reason our blue band works so nicely, and there's a lot of blue banders out there. They love the blue band. Again, the blue band is just a bulging band, but put it to good use with our methodology that we teach. As we continue to move up to these highs, we're at the 74 level next. China's central bank has stepped up its currency following the latest series of weak economic data releases. The midpoint onshore yuan was set at 7.20 against the dollar overnight, while Hang benchmark index closed in bear market territory and 20% below latest high in January. Problems in China might also be leading to a flight to safety trade, with the yield benchmark 10-year U.S. Treasury this week surging to its highest level since 2017. Like the quality flight to safety trade for new highs in the yields. But hey, I will tell you, the Bank of China has been cutting interest rates. There's been talk about tax rates, incentives, but many of those things and measures help fuel China's rapid expansion in the real estate bubble in the first place. There are also structural issues at play, such as slowing urbanization, shrinking population, meaning policymakers might have to prepare for extended periods of weaker growth. A go big or go home strategy might be the only way out of the cycle with the government absorbs sour assets, but could also be challenged given the inflationary risks and whether go far enough to restore investor confidence. So, yeah, definitely feeling. We talked about China this week with their economic numbers that were weak, and I think it's continuing to come right into the market. We really don't have any numbers. There's a small number coming out here at the o'clock. Otherwise, there's really nothing else coming out here this morning. So we shall see. So it's all just trading the volatility here in the market. Next upside is up to 74 area. Again, we are able to, if you had your orders in place against the first level there, 66, if you look at the chat, you see the levels. There's a nice rotation there off our first resistance area. And like I said before, you have your orders in place against those levels. Otherwise, you missed the trade, which is fine. And if you did, it's fine. Look at the next opportunity. We'll do all on it. We did get down to the 59 area there. We go back down there again. We want to go long, anything below 50, 57. You want to be out of any long. We come back down there. You want to try that again. You know, we like to do it the first time. Obviously, so the riskier second time, whether they be levels or any other price action opportunity. Thirty-year fixed mortgages top 7% this week, according to Freddie Mac, making the highest level this morning in more than 20 years. The economy continues to be better than expected. The 10-year yields have moved up, causing mortgage rates to go up. Demand has been impacted by affordability headwinds and low inventory remains the root cause of stalling home sales. So 7%. They were talking 4% not too long ago, 3%, depending on. Yeah. But it hasn't stopped the housing market from prices from coming down a bit that much. All right, we are just kind of hanging here on these interim highs. We're looking at the 74 as our next level of resistance. And there's no numbers coming out this morning. And we wanted to buy on the tip there to 59. It's anything below 57. Definitely good fix. Definitely traded tightly there. All right. If you look at the chat, I have the levels put up there again. Again, we use those as a guide for the day. We can add them, subtract from them, we can tweak them a little bit. It all depends on price action, volatility, and how the markets are moving. And so we're not etched in stone, but by the same token, they're there to use all day long. If you are going to be trading all day long, we focus more on the morning hours to give us our opportunities. We feel the dynamics work better in the morning than you do late in the afternoon. We give much more one-way trade in the afternoon than we do in the morning. Excuse me. All right. I'm looking at 74 minutes, a little up. All right. Again, kind of floating up here at these interim highs, like I said. And again, the first level there was exceptionally nice for us. We're talking about at least 3 to 4 point rotation. Definitely got all the way, more than that if you or the aggressive, and you actually took no heat whatsoever on it, and had a nice rotation off of it. And now we'll just kind of be a little bit patient here and see what happens next. And we continue to uptick, looking at the 74. Again, there was a little buying opportunity there on the rotation back to 58, 59 area earlier, off of the 66, and then we had ourselves a little bit of a back and forth, and now we're looking at the 74 level next. All right, we're upticking here a bit, looking at the 74 area. Yeah, if anybody has any questions, definitely feel free to ask in the chat. Don't mind questions here. All right, upticking here. Actually, there was a little flight this morning because funds came off, but they were a lot higher this morning. As you can tell, they're up. They are up right now, but I didn't realize that they were really up this morning. That's why we have that state there. There was sort of like a fall, I guess. That. Just noticed it right now. The bounce uptick here a bit. All right, we're upticking here, trying to connect up here to our 74 area. Again, we are scaling around that area. Got that up to 72.75 there. There we're going. Again, scaling in, depending on your risk tolerance, how you do it, depends on how much risk you are willing to take. So everybody here has different risk tolerances. So if you're trading the level straight up, that's fine. If you're scaling in, it's good. Depending on how you scale in, obviously. Is a doubt that absolutely depend on your risk tolerance. Yeah, like I said, that was a little just missed out on my entry point there at 73. Got up to 275. So that was not good. And now coming back down here, a little support would be around the 61 area. All right, so we got to be a little bit careful there around the 74 area there. Very unfortunate for if you were scaling in a point above and below, just missed out there. But sometimes that's going to happen. It's happened this week a few times. So, like I said, just make the adjustment according to your risk. This is where we say we can tweak our levels a little bit, right? Because we just missed out on that 74. So, I mean, some of you might have got it. If you guys were scaling in 2 points above and below, which obviously some of you could be. Again, there's not one right way of doing this or wrong way of doing this. So if you're scaling in around an area and you're doing it differently, that's perfectly okay. All right, coming back down here a little bit. Nice rotation there against that area there that we had some resistance. Unfortunately, we did not get filled. At least I didn't get filled. Maybe hopefully some of you did. And you have to be a little bit careful there on the 74 now. If we go back and retest, you can see our green bands coming in there at 78-ish. We probably looking at maybe we're going to keep the top end of the range at 75. Probably have to take the 78 into consideration as well if you want to do it at all. If you're more risk averse, you are looking at the 84 level next. Downside support, like I said, would be around the 61, 62 area. All right, quickly coming back down here. And continue to downtick here a little bit. I said it would have been nice to pick that 74 area up, but I did not get it, which is fine. And I'm going to make adjustments accordingly here. And again, we have a little support right down in this area here. So it's 162. We got right down to 62 there. And a nice little quick rotation there against the little support area here at 62. And quick 2 points. Again, no heat whatsoever. We're trying to stay long. That's fine, but you got to take some profits. And on the price action trades, you definitely have to looking for 2 point rotations on those price action. We said below 50. What was it, 57 on the downside? You're out of any longs. But if you did jump in there around 62, again, you have to just be a little bit patient, pick your spots, and then try to take advantage of it when it works, and then scale out. Nothing wrong with that. All right, coming back down here, already got filled on 62. So if you're gonna take it now, it's a little bit riskier. Again, anything below 57, you still want to be out of any longs if you're going to take the trade. Again, if anybody has any questions, definitely feel free to ask in the chat. If you've been with us this week, we've had definitely talk about whatever questions you have. Again, all we're trying to do here is take advantage of ebbs and flows of the market. All right, we got right down to that 61 and 62 area there. I'm right back up again. If you gave you an exit strategy there below 57, so about 4 points we talked about earlier, and you're getting that kind of rotation here off your level there if you did jump in. All right. I mean, you can see our blue band there. It's coming in at the 59, 60 area. So a couple areas of support there. If you were feeling like jumping in, again, the exit strategy still remains down there at the 57 area. Again, a different way of trading this is that if you have your exit strategy, and then you can find your entry point. If you have your exit strategy, then you can find your entry point, and that way you can, um, yeah, minimize your risk. Again, different ways of trading. All right. So we come down there to, again, with mega below 57. You have your entry points there if you were looking to jump in and get long. Anything below 57, you're not having any longs, and it's really been bouncing very nicely for us if you were trying to jump in there and get long there. And again, we're scalping. So you're getting long, you're getting out, you're getting long, you're getting out. I mean, you're just, and you have your stop in there at 57. So it's just, you're not, it is what it is, You jumped in there again, that's great. If you didn't, that's fine. If we get below that right now, we're going to be looking down at the, well, we hit, no, we do, it could go down to 50. That would be my first out, and then looking at our first support level there at 44 if we go back down there. All right, now we're coming back down here. See where it wants to go. I think we might rotate down here if we get below the 57 area. All right, we are just kind of hanging up here now. Got themselves on a little bit of a range there, but we also give you an exit strategy on the downside. And I think we get below 57 might down tick a little bit. All right, a little range bound here. Let's see where it wants to go. If we get below 57, we might down tick a little bit. We shall see. And again, now they've taken some of the volatility out of the market right now. So we'll see what it wants to do. Patience is important, as we always talk about. All right, definitely a little range bound here. I think if we get above 66, we might rotate higher. We're now pushing down here to the 57. It said that if we get below 57, we might downtick here a little bit. So sometimes we have momentum trades, and that's what's going on right here. And again, sometimes you have to. We're not always counter trend. We're looking. Sometimes we do have momentum trades, but they have to get set up by the market and by the trader, by the price action. And I got a nice little quick rotation there down to 54 and change. Again, you're looking to scalp these price action plays. So those are, again, 2 points out of them at the minimum, and then you can take your profits completely, or just kind of take some profits off the table and then see what happens with the rest of them if you're trading multiple contracts. But you have to just those, like I said earlier, those price action trades are probably looking for about 2 points on those opportunities. So a quick rotation there below the 57, hit some stops, take some profits, and now we're just kind of coming back up here. Again, you have to just take advantage of ebbs and flows when they present themselves. And even though they've come right back up here, hopefully you've been able to take some profits when it got down to 54 and change there. If you are looking for a quick scalp. Again, all we're trying to do here is scalp the market, take advantage of ebbs and flows. The levels, again, we're looking at about 3 to 4 points. The price action plays minimally at least 2 points for sure. And that way you keep yourself in the game and take advantage of those quick ebbs and flows when they present themselves. All right, again, now we come all the way back up here. We said above 67, might rotate back up. come go from all the way back down, ticking a little bit. They kind of faked everybody out there, and now rotating all the way back up here. Anything above 67 might definitely want to be out of any shorts, and then might rotate back up here a little bit. And that is why we take advantage of. That's why we're scalping, because they kind of faked everybody out there when it drifted down below 57. They hit those stops and then quickly come back up here. Again, all we're trying to do in the meantime is just take advantage of those opportunities when they are there. And there's a quick little hitter there. If you did jump in there below 57, come right back up here to 65 area. Anything above 67 might rotate higher a little bit. All right. Well, we got right up to 67 there and came off. Again, just kind of trying to figure out what it wants to do. We got a little bit range here. It just kind of seems like it wants to stay in this range. All right, looks like we're kind of drifting back into this little range here. Right now, I got no opinion. I had a couple ideas there earlier. It panned out okay. We're trading that little rotation back to that little support area. We set below 57, get a little bit of an opportunity. We got that. Never got above the 67 up here. And now we're just kind of drifting back into this little range. So right now, in no opinion, we got up to tested 67 and then came right back down. So right now, just kind of no opinion anymore. Again, if anybody has any questions, feel free to ask in the chat. All right, we've come down to the lower part of this range again. Got no opinion right now. We could go either way here. So this is where you have to be a little bit patient and kind of just wait till it plays out. Downside support would be at the 44. An upside resistance. We're looking at this. Well, again, be careful there at 74. But I would probably keep it upper end of that range if you're doing anything. Maybe looking at 75 to 76. You can see our green band there is coming in there at 78. All right, definitely range bound here. We've had a pretty busy morning, I think. We've had some nice opportunities there. There's a couple of just misses. Again, depending on how you scaled in around that 74 area, maybe some of you got it. That came off of it very quickly and very nicely there. If you did jump in somehow, maybe you scaled in 2 points above and below. I know some of you do that. But nice little rotation there. We had our nice rotation against our first resistance area. Then we had a couple buying opportunities there and gave you an exit strategy there. And then once we got through that exit strategy, we did have a nice little quick scalp there once we got below 57. And now we're just kind of coming back up here and just kind of just floating in this little range, kind of doing nothing. And this is where you have to be very, very patient here and wait for an opportunity to present itself. But we've been pretty busy this morning. I think kind of made some nice he had some nice opportunities there. And now we're just kind of staying in this range that they created right off the morning, and kind of almost in the middle of that range. So we'll see what's going to happen here. But again, you have to upside. We gave you the levels. I would use the levels going forward right now. I mean, I'm looking at the 74, but we talked about the 74 being a little bit tenuous because of how it traded just earlier on. And downside, I would look at the 44 area. Right, as you can see here, we're definitely range bound. Like I said, this is a very, very quiet kind of trade, not going anywhere. Definitely in the middle of the range, so very hard to figure out which way it's going to break out. We had a one fake out breakout to the downside there, and then, but hopefully, if you were scalping it, you were able to take advantage of a little rotation down, and then quickly came all the way back up and pushed up against the 50-67 area, which I thought we would try to buy, but never got above it. So then came back and rotated back down into this range, and now we're trading both sides of our blue band, so very, very quiet and not much going on. All right, back up here to these highs again. Not I have no opinion right in here. All right. Again, don't like anything in this little range and kind of just pushed up a little, come back in the range. Upside resistance, again, I'm looking at the 70, probably 74 to 75 for sure, not so much a 73 area, only because we just missed out. And if you're more risk averse, you're probably not going to take that level at all. You're going to look at the 84 level above. All right, uptick in here a bit. All right, seems like we want to uptick here a little bit, but who knows? And looking, like I said, upside resistance would be around 75 to 76. You see our green band and our 5 minute come in there at 78. So keep that in consideration if you're going to trade it at all. Otherwise, you're looking for the 84. Nice rotation there in the bond market. Going back very nicely there. Again, if you have any questions, put them in the chat. Anything about what we do here, how we do it, let us know. Try to answer them for you. All right, market continues to uptick again. Give you the strategy up top there around 75. If you are going to take it at all. All right, we're trying to extend here a bit. See if that takes us anywhere. Looking again at the 74 area is a little bit more tenuous. Looking maybe at 75 to 78. And maybe in that range, not so much at 74, only because we just missed it by just that much. If you're more risk averse, you're going to wait for 84. And then you can also manage uh, your risk another way and trade a little bit smaller around it if you're going to take it. I do like the 75 to 78 area, but again, keep it small, trade a little bit less, because obviously we would have liked to get filled on that first rotation up there, but we did not, so it's a lot of risk here right now. But as long as you understand the risk, you can manage it differently and not put on so much risk around that area. Like you could trade a little bit smaller and scale it a little bit differently, or not trade it at all. Right? That's another objective you can use. All right, got up to 70 and change there and came off here a little bit. All right, we're pushing up here to these highs, looking at um, again, the 74 got to be a little bit careful there. If we ever get up there. All right, got ourselves on a little bit of a range, as you could tell. And coming right back down there to try to extend a little bit, but did not. All right, we come right back to the range, come down there to our blue band, if that's what you are looking to jump in at. All right, again, be a little bit careful there on 74 if we do go back up there and test it. Talked about how to manage that a little bit. And again, downside support, really don't have anything good until the 44 level. All right. Definitely getting ourselves into a little bit of a range. It is Friday. Kind of anything could happen today. Let's be a little bit careful here, especially late afternoon when there's a lot less participants in the market. You can definitely use the levels all day long, and then just be a little bit mindful of the fact that we tested at 74 area, kinda, and it's a little bit riskier. But we talked about adjusting a little bit there. Downside support, really, I mean, it has a lot of stops there. It could stop in. I would just pick a spot there around the 44 and just wait for that if we ever get back down there. Otherwise, if you're more risk averse, you're definitely going to wait for it on the upside. You're going to wait till the 84. All right. All righty. So again, hope if you have any questions, ask now. Otherwise, we had a pretty good morning considering how volatile it started. But hopefully we were trying to keep you on the right side of the market and make a little bit of money along the way. And again, if you have any questions, feel free to ask. Back here in a bit.